very angry with myself, very flustered, because instead of taking that huge winner the previous day, I was now going to have to cover up my shares, and overall it was going to become a small loss. I guess I was fortunate that I locked in through the previous day, but the rest of the shares I got covered up and boxed up in the $5 area, so overall it was a red trade. And even though I wasn't happy with how it turned out, even though I did not like that it gapped up huge on me, I'm so proud of the fact that I did take it off. Even though in hindsight now it turns out I didn't have to. But I still am just really pleased with myself for getting out of the trade in that situation. Because that would have been a situation where I could have so easily gotten stuck. And even though big picture, it would have worked out with MGT because it didn't collapse later that morning, there will be other stocks and other situations where that stock will parabolically for 9 instead. I took off and I protected myself. Yes, it was another loss in a string of frustrating short sell attempts like this. But again, it goes back to the mentality. The higher it goes, the better of an opportunity it's going to be eventually. And for those of you who have seen my DVD, this really ties into Chapter 9. That chapter where I talked about shorting the front side of the movement, talk about shorting lower highs. And I concluded the chapter just showing you a few stubborn trades of mine where I didn't take off my risk, where I took really big losses as a result. And I basically concluded by saying, you know what, I can't trade these right now because I can't follow my own rules. And if you're going to trade on the front side of the move, if you're going to short sell on the front side of the move, trying to get that really prime short selling, you have to be willing to lose. I can't stress that enough. If you're not willing to take that loss, it's going to just cripple you emotionally, or it's going to keep you being stubborn. Wait for the big crack. Wait for it later on the back side of the move. That's the time to attack. But when the stock is still on the front side, it is just so dangerous, as I've learned multiple times with multiple large losses. But in the case of MGT, I did protect myself. Like I said, I was pretty much all covered up and boxed up around $5. And the reason I boxed some was because, again, the only account that the short selling was Vision. I had swung 27,000 shares overnight in that Vision account, which ate up a lot of my buying power because I don't have my accounts funding too big right now. So if I had covered all 27,000 shares and not boxed any, I wouldn't have been able to get anywhere near that kind of a size on a reshort. I think I only had about $70,000 buying power. So I was looking at maybe being able to reshort 12 to 14,000 shares in the $5 area. And I knew that I wanted to have a similar size short, so that's why I chose to box some up instead. So yeah, that did kind of complicate things, that did confuse things a little bit. Unfortunately, a bunch of my trades got merged together as a result. But let me break down the rest of my morning action, and I have kind of tried to calculate out and figure out how much money I made in each portion of the trade. So basically, after being boxed up, after being flat, and starting the day fresh again, frustrated as hell, I actually very briefly switched to a long bias on this. Pretty lucky I didn't get burned on that, actually. But I was thinking huge squeeze possible, because it did gap up to the previous day's high. I was thinking anybody who short sold this after that big crack on Tuesday was going to be underwater. So it definitely was a situation where a big squeeze was possible. And like I said, I've seen it in the past where, even though it's day 3 of the breakdown, it still can shoot up a little higher than you expect. So I was long some right near market open. I think I was long about 520 or so. And I was just giving it a chance to have a big parabolic through 6, through 7, just see how high it can get. And instead, it slung back really hard out of the gate from the 540 area down to 5, and then even under 5, I think it was in the 480s, before shooting right back up to 560, and then it just chopped around in there for a while. And during that consolidation, I just decided, okay, this long is too scary, and I got out. I was out for a very small gain on my long account. So back to flat. And as I was watching this consolidate, it had the double top up in the 560 area. And as it pulled back that second time, as it consolidated above 5, as perks kept looking weak to me, I just took the exact same approach I had taken the previous days. I slowly built my way in, and I was using that 560 high a day as risk. So I started with 5,000 shares to buy on box, then I was on box 10,000, 15, 20. Eventually I wound up being short a net of 23,000 shares. And it was probably from the 520 to 525 area. Again, it's really hard for me to say exact average because some of this was sells in one broker, some of it was shorts in another. But that 23,000 shares, that 560 risk, that was in the neighborhood of $8,000 to $9,000 risk. Yes, it was a big position, but it was a stock that I thought should have squeezed and it didn't. situation. So MGT went on that morning to have its $5 crack. It had a little bit of a rebound off of that, tried to perk through 5 once, failed, and then when it snapped to get through that low a day, it was done. I was really taken aback by how hard of a panic it was. I was not expecting that. I was not expecting that huge of a tank. My plan again had been patient. My plan had been 2 or 3 days swing. But when they pulled support on this overextended chart, they really pulled it. And it got decimated. My first cover was a few thousand shares in the 330 area. I covered a lot more down near 3. I did have some covers near bottom in the 270s. But by the time that bottom at 265 bounced, I was down to just about 2,000 shares. I locked almost all in. It basically panicked $3 a share off of its highs. So yes, the plan had been patience, but at a certain point, if you're going to get that kind of a drop, you need to pay yourself. And I also remembered the day before where I didn't pay myself on a big drop, and I wound up having to sit through a day consolidation as a result. So I chose to take it off. And my plan the whole time as I covered that up was wait for a bounce. Because when you drop $3 a share off of a high like that, there's probably going to be a bounce. I did not have the guts to buy the bounce or try to get long any, but I simply sat back and waited. I wanted there to be a nice big bounce off the lows, and I wanted to attack there. The closing price had been $4.15, so it bottomed at $2.65, and as the bounce got through $3.50 and up towards $4, I figured that was as good a time as any to start re-shorting around the red green point. And honestly, I probably should have gone bigger on this short than I did on the short up in the 5s, because now this was very clearly backside of the move. And this was a part of the pattern that is very, very familiar to me, the bounce short. So I got back up to a total of 20,000 shares short, so I guess I put 18,000 shares on. And those shares were probably about the 380 to 390 average, somewhere in there. I built in along the way again, I just put on a few thousand shares at a time. And then I just tried to be patient for it to fade back off near its lows. And again, I paid myself in the afternoon. I got out near that 265 low. I got out a little bit after it cracked the 265 low. So when it comes down to my best guess of how the profit broke down on this, and I did try to kind of calculate this out, the 23,000 shares short up in the 520s, I think that was about a $49,000 profit. And then the 18,000 share bounce short up in the 380s or 390s, that was about 21,300. But between those two shorts, it totaled about $70,000, more than making up for my morning losses on it, more than making up for my losses the day before. I mean, it was the definition of a good risk-reward setup. My losses were so small compared to my eventual wins. So anyway, just to wrap up, there's one big takeaway lesson on MGT here. Obviously, it's cut losses. I think I made that pretty clear. But if there's a second thing I want everyone to realize, it's that this MGT profit for me, it wasn't from deciphering news. It wasn't from understanding SEC findings. It wasn't from having a better understanding of the fundamentals than everybody else. All this was my typical chart patterns. Familiar price action. I was playing chart patterns that I've seen again and again and again and again and again. So you don't have to be the smartest guy in the world to make a successful trade on a stock like this. You don't even have to trade the same patterns as me. I mean, huge credit to people who were able to long this early and ride it up. I mean, that's not me. I'm really bad at patience on the long side. For those of you who bought and sold for 100, 200, 300% gains, that's crazy. Like, that's a great job. What I hope you aren't is I hope you aren't one of the people who's just holding and hoping and goes for the huge ride up and is going to ride it all the way back down. So for those of you who bought and took profits, congratulations. But the point I'm trying to make is figure out what chart patterns are familiar to you. Which ones are your favorites? Which one's your best at? There is no single right or wrong way to trade. I know a lot of successful traders, and they all have very different approaches that make them successful. But the one thing they all have in common is they trade what is familiar to them. They trade what they are good at. They don't try to nail every single thing that moves a little bit in one direction or the other. They stick to their niche, they stick to their one area, and whenever a setup comes along that's specific to their criteria, they're ready and they attack. So whether you're the trader who can buy something like MGT on the way up and ride it for nice percent gains, or maybe you're the trader like me who shorts it and rides it back down, there's nothing wrong with either approach. You need to figure out the trading style that fits your personality. You need to figure out the setups that make sense to you, and then that's the area that you need to focus on. Everybody is a little bit different. So thanks to everyone who took the time to watch this, and good luck with your trading.
My name is Tim Sykes. I want you guys to understand every single aspect of this game. Short-term window that you have to investorsummit.com and get your early bird pricing for my upcoming content. This week in Orlando in September and May. So if you're not getting the early bird pricing, it's $297 for the first 2 weeks before you register. I highly encourage you to go. I'd like to meet you guys in person, but also it's not for me. It's also my company, Tim Battani. Mark Cook, Michael Flynn, Superman will be there, several other millionaire traders will be there, live trading on Monday, September 12th. But go to TraderInvestorSummit.com to see all of the details, and I really can't wait to see you guys. Also, I got a few practice students today. Just real quickly, Castle Trading, first $1,000 win. This is always a pretty good way. Whenever you get a milestone, you start seeing the world. But I remember the first time I made $100,000 in a day when I was a freshman in college. That was kind of crazy, and it helps you understand the beauty of stock trading and what's possible. So when you make your first 100, the first 1,000, the first 10,000, the first 100,000, even if it's a first million, whatever it is, milestones help you understand, and they should be celebrated. So congrats to Castle Trading. Here's KK, made nice trading on MGT. Lucas made 720 in MGT. Dan the Man, this was a nice patient play on CWLO, which is one of the hottest IPOs, a little higher price than I like, but big $10 a share. Can't complain about that. Here's Vincent. This is the trade that I basically did. CRCM. Vincent actually exited a little nicer, a little higher than I did, but he made a few $100 in a few minutes. Here's Michael. He also made $900 today. Sniper Trades made a quick 400. Lauren, I love this. She had some patience. She missed the spike on GBR the other day, so she shorted a little bit. And this is what you can do with all of these stocks. If you ever miss a spike on a speculative stock, I'm not just saying short everything, but on like a speculative stock like GBR, you can flip it around and you can try and grab it on the way down. And this is a very nice screenshot of her having patience. Just holding 2 days, shorting at 305 and tethering at 208, making 40%. Just a few $100, but that adds up over time. And then also Matt, just first ever trade, buying the pump WRIT, 132 to 130. I told him, very nice, but trading pumps is very risky, so you gotta be careful on that. But congrats. Let me start off, I guess I'll start off with WRIT. Let's talk about pumps. We have laser pumps that are being promoted right now. The charts look manipulated, they look impossible, because they are manipulated, they are impossible. No good company ever goes from 40 cents to $1.40 in 4 minutes. But don't worry about good versus bad companies. Focus on the price action. I know there's a whole little group of short sellers, and they're cynical, and they all look like Yoda, and they live in huts, and they think that you should never buy pumps. You should never buy crappy companies. And that's just stupid. I made my first million buying the worst companies you've ever heard of. Pumps work, especially right now in this market as we're learning. And if you can time it right, you can bank. WRIT is the hottest pump right now. Good job, promoters. VMRI. This was the hottest pump last week. And guess what? bought this out of like $170 before it went to $340 the same day. Or was it the next day? No, it was the next day, yeah. So 24-hour period, you could have doubled your money. Did I capture the 100% rate? No, because when I trade pumps, I am scared as fuck, okay? I got out with 1/10 of the potential profits of what I could have, should have made. But at the same time, I still had profits, and there was actually a lot more money made on the downside. So I don't mind being cautious. And congrats to my top student, Tim Bertani, for making roughly $30,000 in 2 days on the long and short. I think he actually might even be up a little more now. But awesome example. This is straight out of my penny stock framework ED. So if you want less choppy plays, I mean, talking about MGT right now, this is a choppy play. I don't know what it's going to do. You have a morning spike, a morning panic, a little rebound, a little consolidation, a little spike, a little consolidation, another spike, probable double top, now more consolidation. I mean, it's like every pattern in the world all condensed into 2 hours of trading. I don't like it. I don't trust MGT. If we're talking about pumps, you know, WRIT, it's about right now, PMRI was a big pump, and MGT, I would have to place, you know, 3rd place on the bronze medal for the biggest pumps right now. Even though it's not your typical pump, even though you know you have a successful businessman job, they're putting on more press releases than I have ever seen any company ever do. That's not a pump. I've seen a lot of press releases for pumps, and you have to ask, why are they putting out so many press releases? There's so much stuff going on with the company. The answer is no. There's a lot of stuff going on with every company. And this company specifically seems very interested in getting their stock price up, getting every single thing that they do. Notice, you know, when John McAfee takes a dump, they'll put out a press release saying, here's a successful number 2 launch today. That's how insane this press release machine is. When MGT says that they're going into Bitcoin and you know, cryptocurrency and all this security, I think that they should change business models and go into the PR business because they are fantastic at PR. Who else could put out a press release about John McAfee taking a dump and it being successful? I'm kidding about the dump, but I wouldn't be surprised if they put out similar, ridiculous type press releases that they have pretty much every single day. So I don't trust it. I just don't. I've missed out on these run-ups lately. You know, I was buying this in the 250s and 240s, and I was taking a lot of heat because I was technically buying a pump. But I like buying pumps when they're down 50% and they look like they have a solid base. There's absolutely nothing wrong with buying this in the 240s or 250s. Don't listen to those little introverted, non-transparent Yoda short sellers in the world where they never buy anything. And guess what? That's why they're poor as fuck and weird as fuck. And I have to swear I'm sorry because I'm really pissed off due to all the narrow-mindedness going around where you should never buy penny stocks. You should never buy dips. You know, screw that, okay? You should never buy bad companies. Trade the price action. Whatever you can do. Did buying MGT like I was here in the 240s and 250s several times, even though, you know, I was a little too early. I didn't hold for the 3s and now the 4s. It shows that I'm on the right track. And guess what? If I'm wrong, it's not the end of the world. Cut losses quickly if support fails. So it is a solid risk-reward scenario. That's all you can do. It's a solid risk-reward scenario. Again, and sometimes you can be wrong. Let me talk about my trade this morning on CMCM. Not CMCM. This is Care.com. Kind of like just invested their first investment in a public company. We've got to believe in the public company take them over. And this stock is up huge. And it's up 40%. This is not a small company. But when the news was announced yesterday, you know, it went pretty much to the 9s and the 10s. And late when you really could have gotten a position, it was already up to 12. And then pre-market today is up to 12, 12.20, 12.30 even. I do not want to chase it, because when you have this kind of a gap, I don't care if Google's investing, I don't care if John McAfee is investing, I don't care if Jesus is investing. I don't know how it's going to react when the real volume comes in. And so the only play for this is to dip buy it on a big dip. And that's exactly what we happened. We got a nice little morning spike right at the market open. It opened at around 1160, 1170, and immediately spiked to 12, and then ran into a wall. And that wall is held all day. This is like the ice wall in Game of Thrones, where the White Walkers are not gonna pass through this wall, and unless Bran screws it up like he already did once. But you want to dip buy into panic. This was the exact same pattern the other day on OPTT, where I'm dip buying. I've done this a few times. I did this on JVA a few weeks ago. When you have a stock that's up huge, you don't necessarily want to chase it right at the open. But if a big dip opens up, that increases your risk reward. And I actually nailed this with my dip buy here in the 1120s. I could still be holding right now. But when you dip buy like this, and then you get a spike back up to the 1180s, 1190s, I got a little lucky on this one. Part of the reason why it spiked so quickly is you see this big volume spike. It was mentioned on Fox Business, and they talked about the Google deal. So for me, I can't control when TV or any media report is going to come out. I think this was like 10 or 15 minutes after I bought, which was kind of cool. But if you're buying good news companies, you're probably going to have follow-up good news. And just as the story spread, because frankly, these kinds of companies, this is a stock, it's still part of the small cap issue where mainstream financial reports is not cover it every single second. So you can follow up with your company. We had one media coverage here, and then we had another media coverage here. And so if you can dip buy and not chase, and you're not I remember buying this stock right now at 1190 or even 1180. There's a solid wall at front. Maybe if it can break this, wall, then maybe I might buy. But that's probably not going to be until season 8. Okay? Then it might be the growth down. So you have to be very careful with these walls. And the wall is at 12, and now the wall is on 1190. Opportunity to make money is to dip buy this. And even though this is choppy, it's a lot easier than a stock like MGT, which is making new highs, making lows, CRCM have really positive news. People investing in this concept. It's not a small investment in this company. And MGT is just press release. John McAfee taking number 1, John McAfee taking number 2, and that's how the MGT goes up. I would much rather buy a stock like this with a solid catalyst. And that's why I'm touching each other on. This was too quick of a spike, and I won't touch it, but congrats to those of you who nailed it. PBLT is another morning spiker, and that's coming down a little bit. AKER had some positive news. This was a morning spiker that didn't really last that long. GBSM had some news, and this could have been spiked at all. This one was certainly spiked. This spike big last night after hours, but today it's absolutely nothing. So be careful with all of these spikes. Yesterday, I should mention, I bought GWR on the dip in the 60s. Okay, it already had a big spike. It's already making a video that's supposed to why did I buy GWR? This is also a pump, but it has a history of spiking. Now, most importantly, this guy Larry Logan, the professional pumper, owns 10%. You got to think that, the professional pumper doesn't know what's he going to do. He's going to pump. So you're just waiting for the setup. And yesterday it turned out to be record volume. So again, I did not want to chase it yesterday. Very similar to wasn't that it had any good news. The catalyst was the fact that it had such a huge morning spike on such huge volume. So I wanted to dip that. And that's exactly what I did here. And we got a nice uptrend. We got a nice breakout of the day high. But the reason why I was selling here in the 19s, I gave this one hours. Some of you guys are not used to that. They're like, oh, we're in and out in 15 minutes or an hour or 30 minutes. I believe as long as I feel comfortable with the price action. With TWR, I gave a huge amount of time, not because it's a good company, not because I was so sure of it, but because the price action was good. And I thought that it could retest the morning high of 19. And my whole goal when I was buying in the 16s and 17s was that I thought that it could get to the 20s. And if you remember, this was one of my biggest winners in June. I was buying this at 20 cents. I sold it at 25 and 28. It went up to 32, and I got it at 34. So this has a history of really spiking if it can get down, if the volume can get up. And we saw that yesterday. And today also. But the reason why I sold it, I gave it one chance to break out. I did not sell into this breakout. I don't want to sell into a stock that's making a new high. I know there's some people out there, they're like scalpers, and they're selling the strength, and they're buying dips. If the stock makes a new high, that gives me more reason to hold it. And now it's a breakout. And I thought that it could actually go to the 20s, and if it gets to the 20s, it could go super low right now. As it turned out though, it came right back down, and then tried again. And now we have, look at this, the Twin Towers. I make a lot of analogies. 19 and a half. Okay? So when you have a double top like this, and yes, technically it is a breakout of the morning high. But I don't like double tops. Okay? And I don't like stocks that can barely break down. It's really unfortunate that the breakout was only half a million shares. But I don't get to choose. I mean, this thing was doing 40 million shares. They're coding though on those 7. I don't know what's going on. I'm only buying this because there's a professional company attached. He's probably planning some company in the future. They're planning to help, as these promoters like to do, like get the stock up in advance so that the company can get higher prices. But when there's a double top, I'm sorry, I'm out. And I don't give it another chance. And as it turned out, close to the 17s. Today, yet again, I didn't even trade it today. And yet again, what did we do? We finished right here at 19 and a half. So 19 and a half is now real resistance. So I will not be buying it until it breaks out, and until that breakout is convincing. I'm working on this really deep culture check. It's really going to help explain all of this stuff that's going on. I know that some of you guys think that you can learn everything for free. You don't know the subtlety of the market, but I wasn't this is a breakout out there. That's what I got. Why is this going down? Well, because your stocks and breakouts, it's not an exact science. But convincing breakout, you don't need a double top, and you don't need a triple top. As you see, it's more, a really good trend on that part. Buying here in the 16s and 17s, and selling in the 19s. I took the beat of the move, and more importantly, I gave it time, and I wanted to see how it would go. I used the stock to show me how to trade. I reacted to the price action, and that's how you show it. Not that this is a good company or this is a bad company. Don't discriminate to bring on introverts, growth and show them living. You know how many people there are out there who pretend to be experts in the game and show them living? And if you're an expert, show your living. Show your face. Don't be a Jordan introvert. Also, ESPN was my friend yesterday, and again, I got a lot of hate from the Yoda plans about this, and it's kind of funny because this one, has been spiking, it's come down, it's a very sketchy stock, and short sellers are obsessed with it. They think that this thing is just worthless, and for me, I'm not trying to doubt the company, I'm more interested in watching the price action. You've got a big morning spike, a second morning spike, a third morning spike, and yesterday was its third morning spike in a row. And yesterday, unlike the previous 2 days, it didn't just morning spike and thing. Morning spike thing, morning spike thing, morning spike thing. Yesterday, we had morning spike, like invert the pattern. To break out past 5, morning spike today, and maybe at 5:50. And I thought that because everyone was anticipating the morning spike, you could buy it a little early. I think I was buying it at like 2:30 p.m. Normally I like to buy at 3:30 because then it lessens your risk because you kind of know where the stock is going to close. You're buying through the market trades in specific anticipation of a morning spike the next day. But I thought people would anticipate the morning spike, and that way I thought that it might have a good chance of it not being wrong. And I was just wrong. And I cut loss too late. But yesterday, we actually did get a morning spike today, but the resistance at 5-ish. So the key on this one is that, okay, it has morning spikes, but 490-ish, 810 resistance. So you don't want to be buying that. And also, the longer futures are right about this. The longer it fails to break 5, this actually probably will come back down to the points. So it's tough to try to guess, is it going to break out, is it not? As long as it doesn't break 5, shorts are in control. But in control for what? I mean, I had a 3% loss. And all the little Yoda teachers are like, oh, you had a terrible loss. No, listen, little Yoda wannabes. I shouldn't even say Yoda. Yoda is wise. These little teachers who don't show their real pictures or anything, they're just all over the interwebs. They're the ones who are not understanding risk reporting. I lost 3%. Woo-hoo! 3% is fine. Okay? TWER, I made nearly 20%. So if you can make 20% on a trade,